What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at one of the fastest growing industries of the decade. I've got a couple of plays that we can take a look at that gives us some nice exposure to the industry, and one pure play that I think will do very well over the next few years. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day with growth stocks, penny stocks, market news, anything I think can help us grow our portfolios and become better investors. There's a link down in the description to my Patreon account. Come join the family over there. I'd love to have you. The first 100 patrons, I'm doing it for just $1. I do want to say real quick, thank you so much to my current patrons and my subscribers. You have no idea how much it means to me. Like, seriously, I love you so much. Growing the channel with you guys, your support is everything to me, and I just want you guys to understand how much I appreciate it. When you come over to the Patreon, you'll get access to the private Discord where we talk stocks. You'll get links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock up to the second I do it, anytime I enter a swing trade or a crypto trade, you'll be able to check that out and follow along. And then I'm also finishing up a channel in the Discord this weekend that'll have all of our plays with short and long-term price targets and a grading system that we can adjust as time goes on and things change. But let's not waste any time, guys. Let's jump in. So today we are looking at the artificial intelligence industry. This is one of the fastest growing industries of the decade, and it is just continuously getting bigger and bigger and more powerful. Guys, Gen Z, millennials like us, we are the next generation. And as we get older and as we grow up and our kids, grow up, you got to think like our kids and our nephews and our, the younger people of today, they grew up with cell phones, Xboxes, computers, iPads right in their hands. They understand it, they know it, and they're passionate about it. And so this industry will just continue to get bigger and bigger. If we jump in and take a look, guys, you can see right here, in 2019, the market was $39.9 billion. In 2020, it almost doubled to $62.4 billion. And in 2021, it is expected, in 2027, it is expected to grow to $733.7 billion. So in the next, 6 years, it is going to just explode. That is a 42% compounded annual growth rate from 2020 to 2027, which is massive, guys. Today, I wanted to get us a couple of plays that will give us some really nice exposure to it. So there's a ton of different options out there. You've got the ARQ ETF that does robotics and artificial intelligence, but they also do a little bit more 3D printing and software and things like that. I wanted to find a little bit more of a pure play. This is a really good ETF right here. This is the THNQ ETF, the Robo Global Artificial Intelligence ETF. If you read the fund description here, the Robo Global Artificial Intelligence ETF invests in companies around the world that are leading the AI revolution. Included in THNQ are companies developing the technology and infrastructure enabling AI, such as computing, data, and cloud services, as well as companies that apply AI in various verticals from business processes to e-commerce and healthcare, among others. Guys, this is a way to do a lot of diversification. As you can see down here, this is some of the performance metrics, but you can see that this is some of their biggest holdings. You've got IBM, ANET, you've got a lot of big names in here, but there is a ton. So by investing in these ETFs, it gives you a lot of diversification. So you have exposure to all of these different companies doing all of these different things, which we all know that diversification is big when you're investing in things like this, especially long term. It gives you the ability to lower your risk. Now, you're obviously going to get a little bit less of a chance for massive gains because of the nature of having all of those different companies in there. It's harder to have 50, 100, 200 different companies all up big versus having a couple, but it's also a lot harder to have it be down a ton when you've got that many in there versus only holding a couple. So this is one really great option. You can click on the top 10. It'll show you the top 10, holdings in here. Amazon's in there, Microsoft. So I will link this below so you can go check this out. This is a really good, option if you want to invest in the artificial intelligence industry. You can kind of see the chart here, started trading back here in May of 2020 and has grown consistently ever since then. Opened up and was down here around the $24 mark, ran all the way up and hit a high of $46.90. Ever since about the end of February has been trading downwards with the market correction. Came all the way down and touched a level of around $37. Tried to make its way back up, got rejected at the moving averages and got pushed back down. Currently sitting at around $39.05. Not looking too bad. When I look at a play like this, guys, I think 2, 3, 4, 5, 6 years out. This is a play that you would set up, you would dollar cost average, you put your initial investment in there, or you throw it in a portfolio or whatever, and you just put money in it every week or every month or however you want to do it, and just let it ride for years and years and years and years, and check it every so often, and see how it's doing. But this is not something that you watch every second of every day. This is an emerging industry. You're going to have ups, you're going to have downs, but I think overall, if it grows at the compounded annual growth rate that it's expected to of 42.2%, this could give you very, very nice gains by 2025, 2027. I've done some other videos on VLDR, the LiDAR sensor company, DMYI, the quantum computer industry, the rocket company, Archer. I did another one on the electric aircraft company. So, we're big on emerging technologies, disruptive industries, companies that are leading the way and blazing the trail for these emerging technologies. Guys, quantum computing, robotics, artificial intelligence, machine learning, those are the types of things that are going to fuel our future. When you think about it, if you think of the last 15 years, the technology grew more in the last 15 years than it did for the 200 previous to that. So we are in the era of innovation. I saw an interview with Kathy Wood the other day talking about intergenerational wealth changes and how the millennials and the Gen Z is what they call them are way more progressive than the hedge fund investors on these emerging technologies. They understand, they are passionate about it, and I agree with that. I believe that artificial intelligence and things like this will be the big leaders in the next 5 to 10 years. Value stocks are great. We're at a point in the market right now where value investing is becoming a very big thing right now. We were in a period of momentum trading and growth stocks the last few months. With this big market correction, I do think that fundamentals will start to play a really big role in investing in the next little while. But overall, in the next 5 to 10 years, I think it'll be growth stocks, emerging technologies, companies that are innovating and being taking risks, being willing to take the risk to grow and find those breakthroughs. Like I said in a previous video, Uber didn't put taxi companies out of business. Amazon didn't put retail companies out of business. The poor service, the lack of innovation, the cost, those are what put those companies out of business or those industries out of business. Think about the taxi companies. So, challenging to get a taxi. You got in a state like mine, Utah, where they're not just driving around everywhere, you got to call them up and it's just a pain. And then they get there and it's poor service, it's expensive, where with Uber, you jump on, You order it on your phone, it shows up, you jump in, and they're all independent contractors. So they try to provide a good service. They want to provide a good service. You know, I've gotten in Ubers before and they have, you know, bags of candy and water bottles and, you know, and TVs, you know, on the back of their headrests, like, you know, ones that they put on there. And, you know, so guys, it's things like that. It's industries that are innovating and becoming better that are going to continuously grow. And the companies and the industries that are not, that are stuck in their ways, that are going to try to do everything old school, are going to die. They're going to have a lot of trouble in, you know, in the times that we're in right now. Like I said, guys, if you take a look at the chart, this is just real nice, consistent growth. This big pullback is giving you a really nice entry off the top of the high of upwards of around $50. Again, guys, this is a stock you put in your portfolio and let it ride. Definitely take a look at this. Look at all of the holdings, see if you like it. The main stock I wanted to talk about today, though, was C3.AI. This is the ticker symbol AI. This company is very, very cool. They are a artificial intelligence, machine learning software company. This is their website. If we take a look at the AR software, they've got a couple different products. What I really like about this, though, is the industries that they are in. Guys, they are pretty much a company that develops these programs and these softwares and these you know, machine learning you know, types of programs that they can you know, take out and give to industries like the oil and gas industry that really need this type of software but can't do it on their own. And it helps them be more efficient, to you know, find better processes, to, you know, work with data, to do all of these different things to help their company overall. So this is a really pure play on the artificial intelligence and the machine learning type program. That's pretty much all they do. They work with a ton of different big industries, smart cities, transportation, telecommunication, retail, healthcare, oil and gas, a ton of them. If we go and take a look at their different products here, you can see here the C3.AI suite is a comprehensive platform for rapidly developing, deploying, and operating enterprise AI applications. Their C3.AI applications, pre-built SaaS application for rapidly addressing high-value cases. Their C3.AI Ex Machina is a no-code AI and analytics for applying data sciences to everyday business decisions. Pretty cool numbers here. 770 enterprise source systems integrated, 38 trillion rows under management, and 1.1 billion predictions every single day. Guys, I'm really bullish on this company. I think they're going to do very, very well moving forward. Let me give you some numbers here. Now, this is a growth company, right? So they're going to have, you know, revenue growth, but the net income is going to be a little bit low. I honestly kind of think the fundamentals on this stock is kind of hiding or masking their true potential moving forward. So in 2019, they had a they did $91.6 million. Then they did $156.7 million in 2020, $173.6 million in their trailing 12 months. So really nice revenue growth. They actually had a 71% revenue growth year over year. The sector median's like 5%. Now the sector median's tough because you've got so many different companies underneath that umbrella, like IBM and Google and all these other companies. So that one's a little bit tough. This is a newer company. Their gross profit was 75% in their trailing 12 months. They did $61 million in 2019, $117.9 million in 2020, and then they did $130 million in their trailing 12 months. Now their net revenue, or excuse me, net income, they lost $33 million in 2019. They lost $69 million in 2020, and then they lost $62 million in their trailing 12 months. They do have a very nice assets over liabilities. They've got $1.18 billion in assets with only $110 million in liabilities. So they're in a position where if they ever get in trouble or if they ever need to pay off their debts, they've got more than enough assets to liquidate and pay that off, which is something you really want to see in a growth company like this. A lot of those assets came from their IPO. Now, let me give you some revenue projections. So in 2021, the full year, they're expected to do 181 million. In 2024, they're expected to jump that all the way up to 537.5 million. And then jump it all the way up to 1.3 billion in 2026. So in just 2 years, they're projected to more than double their 2024 revenue. And then 2 years later, they're going to do 2.2 billion. So almost doubling it again in 2 years. And then in 2030, projected to do 3.46 billion. So every 2 years, they are getting close to doubling it, except for that 2028 to 2030, where they do 2.2 and then 3.4, which regardless, that is massive revenue growth there. What I was saying earlier about the industry being projected to do 737 billion by 2025, I think, if they even capture 1% of that, that's over $7 billion, which is huge. So now let me go over their Q3 earnings with you. Those ended on December 31st, I believe. That was Q3 for 2021, and then they're going to do Q3 for 2021 ends like the end of March. So they did 49.1 million in Q3 that ended in December. That was 19% growth from the 41.3 million in Q3 of 2020. So nice growth there. Their subscription revenue, which is like their bread and butter. Obviously, these companies are subscribing to their services, their platform or programs. That was up 23.3% from year to date, I believe. And then that was up 23% from the quarter of 2020. Yeah. Their year-to-date revenue, so like their 9-month year-to-date, is up 15.8% from 98.6 million to 114.2 million. So their 9-month, their full 3 quarters of 2021 is 114 million versus last year in their first 3 quarters was 98 million. So very nice growth there at 15%. Their gross margin for Q3 was 75%. That is a massive gross margin number. If they can maintain that, that would be huge. Now, this is what I like about them, guys. That's nice revenue, right? Looks good from what they've reported, not projected, what they've reported. Their average total contract value is $12.1 million in their fiscal 2020, which is a good thing and can be a bad thing. It's a good thing in the sense of 1 or 2 customers can drastically improve their revenue. So if they, happen to just kind of fall into a contract or a deal, that can drastically improve their overall revenue. If something happens and one of their customers bails, that can drastically hurt their revenue. So I like it in the sense that I think that their product is a good product. I think, they've done very well, and they will continue to grow contracts. But this is what I think is kind of shadowing them and kind of hiding their true potential right here. They have a backlog of cancelable contracts. So they've got all these contracts with these companies that are non-cancelable. They know the companies that have the contracts with them, they can't cancel them. The total, I want to say the contracts that are already signed, they're existing, is 247.5 million as of January 2021. So that just ensures their future growth. I mean, what they consider a backlog of existing contracts is the amount of, it's essentially future revenue that has not been recognized. So it's deals that they've got inked on paper that they haven't recognized in their revenue. So these numbers of them growing revenue, they still have $247.5 million that isn't even on paper yet. That's not even showing in the report. So they've got multiple agreements with Baker Hughes for the use of their software solutions. That is going to equal 53.3 million in their full year 2021, and then 150 million in their fiscal year 2024. They've only recognized $21.6 million of this total contract. So they still have a ton more to go with that contract with Baker Hughes that's already inked. So there's a lot of revenue there that's already accounted for, but they just can't show it on their books yet or on their reports. So that just, it's ensuring that they're going to have at least that revenue. Their total addressable market was $40 billion in 2019. Like I said, it's growing every single year. So with a $12.1 million average contract and the industry continuously to grow, I would imagine their overall contract will probably stay the same, maybe even get a little bit smaller. But with the industry growing, it's opening them up to a lot more potential clients. So now let's take a look at the chart. I do want to kind of show you their current price and then kind of give you my price target on it. So you can see they came out on IPO and just boom, popped way up around 130, sold off, boom, went clear up here and reached a high of $183.90. They almost were at 185 bucks. Boom, got sold off real hard right here in the beginning of January, gap down. Did kind of trade sideways a little bit on an uptrend right up here until the middle of February. And then boom, just got destroyed through the middle of February till now. I mean, they dropped, if we look here, they dropped 64%, $115 since February 10th to now. That is a massive sell-off, guys. That's why I chose this one. I really like the company. I really like the product. I really like the revenue. I really like the projected revenue, but I really like the price it's at now. I don't own this stock yet. I don't own it. You've got 175% upside just to get back to their previous high, which I think is very doable. I think that they can do it. I don't know how soon, but I think it will happen. So right now, they are currently trading at 37 times their trailing 12 months revenue, okay? If you look out 2024 projected revenue, so their 2024 projected revenue is 537 million. To put, if there's, so pretty much their stock, if it was $206 a share, that would put them trading at 37 times 2024 earnings. So my price target is around $200 by 2024. And so it is going to take some time to get there. Obviously, that's 3 years away. But from $64 up to $200, that is massive, massive growth. Now, you've seen them trade at more than 37 times revenue when it was clear up here. So it's definitely doable. Obviously, that is very extended, very high valuation, very expensive to pay for a company, but you see companies trading at crazy multiples all the time. And I think with the industry growing as rapidly as it is, they could really, really capitalize on that, and they could get to that $200 price target by 2024, in my opinion. So that's my price target, guys. A more 1 year price target by the end of 2021. I see them getting up right here around, excuse me, around this $100 range, no problem. You know, if you see here, this is where it kind of gapped down. I think they will probably run into a little bit of resistance right here at like the $92 range. I also think you're going to find some resistance there. Let's see here. Why isn't that working? There, right there. So you're going to run into some resistance up the, you know, on the way back up, probably hitting into these moving averages as well. But guys, this is a stock that is a long-term hold. It's not a day-to-day type play. It's gotten beat down to levels that is, you know, really enticing, really looks really good right now. So put this on your watch list. Go do some research on it. If I was you, I would probably wait a little bit longer to see what it's going to do. Watch how it reacts over the course of the next few weeks. and then make your decision from there. That's what I'm going to do. I'm going to watch it, wait, kind of see what happens. If it continues to trade towards the downside, I'm going to wait. As soon as I see it start to, make its way back up towards the upside, we get some more confirmation, I'm probably going to make an entry on it, put it in my long-term portfolio, dollar cost average into it, and let it ride. So that's it for today, guys. I wanted to just jump on, show you a really cool industry. This video is for entertainment purposes only. I am not a licensed stockbroker. Always go do your own research and due diligence. I appreciate you guys so much for watching the video. If you have a price target on this stock, put it down in the comments. If you agree with me, let me know. Come join us at the Patreon. I'd love to have you. And to all of my current patrons and subscribers, thank you so much. I love you more than anything. I'll see you guys in the Discord, and I'll see you in the next video. Peace.